Okay, and we're live. So, welcome to another episode of Cyber Bytes, the podcast. Today, I'm happy to be joined by Boaz Albaranes, who is the managing partner over at Mindset Ventures. Boaz, it's a pleasure to have you on, dude. How's things?
Thank you. Thank you for having me.
You're welcome. We are just discussing before you actually took the trip to the UK last week, right? So, you were visiting and went to Black Hat.
Yeah, I did. I spent a few days in London. Actually, I went to two events, did a lot of meetings with nice people. Just a bit cold for a Middle Eastern like me in the city, but it was nice.
Dude, it's freezing at the moment in the UK. Yes, it's not fun. Did you get to experience any pubs in the
Yeah,
UK?
obviously. Yeah, some pubs. We went to a football game. It was nice.
Nice, good. Well, the way I want to start this, Boaz, is to just give the audience an idea of who you are, rewinding the clock. So, what's your journey into the venture space? How did you end up here?
Yeah. Okay. So as all good things in life, it happened by chance. I didn't mean to be a VC. I started my career as an engineer. I studied electrical and computer engineering in the Technion, which is a technical school here in Israel. Spent a few years as a developer, but didn't really connect with being a engineer. And I guess engineering didn't lose that much that I dumped the profession. And then actually I had 9 years in the government here in Israel. The government in Israel is actually very active in the tech world. It's investing, it's promoting, it does events, it gives money, grants, incubators, a lot of programs. So I was part of this team for good years. And then also Israel has a diplomatic corps that focuses on business, not the political, the Ministry of Foreign Affairs, but
Mm.
the Ministry of Economy. So I spent 3 years in Brazil as the Israeli economic consul, which basically my role was to assist Israeli companies do business in Brazil and Brazil in Israel. So you kind of get a lot of companies from a lot of different industries and verticals. It was nice. And then when we got back to Israel, we kind of decided to shift to a new thing. And a mutual friend introduced me to who today are my partners. And they just started Mindset and was looking for someone in Israel to manage what's going on here. And yeah, and we grew along the years. In the beginning, it was a small fund, just a few millions, and then we grew to 20, and then to 50, and now we're from our fourth fund. So the check size grew. The focus has always been enterprise software, B2B,
Hmm.
security or cyber within this, but not solely. And yeah, that's what I've been doing in the past 8 years.
Right. Love it. And yeah, as you mentioned, I know mindset is more enterprise B2B. Security is obviously an element of that, which we'll discuss in the podcast as well. Mindset, let's just paint a picture of you guys then. So where are you today in terms of fund size, check sizes? Talk us through that.
Yeah, so we do kind of between the seed and the A or joining an A round. Our check size is probably 1.5 to 2, could be 2.5, depends on the round. We like very much in between rounds, so we offer a lot of safes. Safe is kind of a mechanism to invest between rounds in which you don't have to do like a proper round with all the documentation and the long process. And this is a good way of going into good companies before they raise like a big A. Um, in terms of the stage, so sometimes seed and A are used for PR purposes. So we would enter anything from kind of an MVP and a few design partners, which means we're not going to do just two people in a presentation, but anything after that is probably the entry point. And the highest or the latest would be kind of an A round, like a few hundred Ks,
Mhm.
maybe $1 million in ARR. This is kind of our sweet spot. And I would say that we're fairly flexible, which is good. Some funds are kind of more strict in ownership stake and some terms in the round. And also we're fairly quick, meaning for founders, we try to be considerate in the sense that we're not going to do like a 3, 4, 5 months diligence. I'm not a patient person, so I don't have the patience to do such a long process, usually a few weeks time.
Nice. Yeah. And where I want to start is that you don't have to give away all your secrets here, Boaz, but when you're looking at like prioritizing and evaluating potential investments into if it's security startup or just general enterprise SaaS company, what's your sort of criteria? How are you going about that?
Well, that's a good, could be a long answer, but maybe I'll keep it short.
Hmm.
after all the checkboxes, right? That like the thesis and everything within what we do, I think there's a few ways to analyze if a company is interesting. One would be from the risk point of view, meaning fairly quickly we try to identify the risks because we are venture capital investors. We obviously invest when there's a lot of risk, which is fine. We just want to know what risk or which risks we are taking. So it's very important in the beginning just to map the risks and then to see how the company is mitigating them. It won't be able to mitigate them all. We just want to be okay with taking those risks. So this is one very important aspect of it. And we try to speak to technology specialists, to the company itself, to clients, to potential clients, to competitors sometimes. So this is one angle. The second will be try to map where in the development stage of the market that the company is operating in we are at, meaning let's go to existing market with a lot of incumbents, and maybe there's a new technology evolving, a newly formed kind of market. Let's say that 5-10 years ago, there was no solution in this space, and now there are a few, but relatively new ones. Or if it's a category creator, meaning there isn't even a market. That here it's interesting because obviously the company can be pioneering, but it's also riskier.
Hmm.
So this is the second aspect. And the third, maybe looking at security specifically. So sometimes people refer to cyber as a market. It's like 50 different markets for us. So we really try to analyze the mechanism and the structure of each specific market. So I don't know, ASPM is not like API security, it's not like cloud security, it's not like even within cloud security, there are a few different markets. The last couple of years, with AI, so AI for security for something. So we need to be really granular in analyzing the market or this sub-market, and also how the company, specifically in security, by the way, could become a platform or larger player, not just a small solution like a feature. That's
Yeah.
probably an important aspect.
Yeah, because there's that big discussion between best of breed, best of suite, platform play, etc. Just going back to the risk point. So this is interesting. So obviously there's so much risk that comes with investing in a startup. Is there like a criteria, like if it goes over three key risks, you won't invest, sort of thing, or like how do you actually categorize that, or is it not that kind of defined? It's more loose.
Yeah, I would say that there's two aspects to look at it. One is, early stage is more like an art than science. But on the other hand, I would say there could be one risk which is just a red flag. It's too much. So one risk could be enough if we see that it's too much of big of a risk.
Mm,
Meaning, I'll give you an example, maybe just for it to be practical. So if we're talking about those companies or category creators, one of the biggest risk is when the market will happen, if and when. Now, if it will happen, it's not enough. It needs to happen in the next 2-3 years because the company won't have runway for like a decade. So if we feel that the market is not there yet, even though the company is interesting, the team is interesting, then we'll say no, even though it could be lucrative down the road.
hmm
And yes, a combination of a few risks, with which each one of them is not like a big deal, but the four of them together could be too much. It's not like we're really grading and then multiplying and then get a number, and I'll tell you that above 72 is yes and below is no. But it's kind of a sense. And to be completely honest, it's also really depends on opportunity cost.
hmm
As an enterprise software VC, we look at very different companies sometimes, and it's hard to compare apple to apples,
Yeah.
or to oranges, but that's what we do.
hmm
So sometimes it's just like a better opportunity that fits us, our DNA better. It's not
mm
necessarily that it's good or bad or better or worse.
Yeah, yeah. And can you maybe share a notable investment that you guys have made and what factors have contributed to their success? I mean, if you've got a security portfolio, that'd be great, or just more general B2B, if one's in mind.
Yeah, I'll speak about our last two investments just because they're both security in Israel. One is a company called Apono, and the second is a company called Tamnun. Apono is acting in the privileged access management space. Obviously, if going back to what I said before, so this is definitely an existing market with incumbents, with players that is have been around for quite a while. We felt that with the technology shift of the past 2, 3 years, and with the shift to cloud, in which the traditional PAM solutions are much more on-prem focused, we felt there is an opportunity here. In addition, we obviously very much liked the team, Roman Ophir, and felt that they're actually kind of entrepreneur material. So that's the first example. The second actually belongs to maybe the market creator or somewhere there, the company called Tamnoon. And Marina and Idan, the founders, they are actually building kind of if we look at Arctic Wolf, maybe an example, kind of an MDR, but for the cloud, like for the Synapse of the world. Meaning you now adopt the Synapse tool, whatever, doesn't matter of which company, and all of a sudden you get a gazillion of alerts. And then I said, wait, whoa, no, this is not what I bought the tool for. And it creates like 10,000 more hours of work. So with the help of AI, with a great help of AI, they're able to, first of all, understand which risks are more critical and then basically take care of them.
Yeah.
And it's a very interesting use of a new technology to solve an existing problem.
Yeah. Yeah. Two good examples. And I've heard
Maybe
good
just to
things.
mention, though, that with Tamnoon, it's not that we're taking the human out of the loop. It's important to mention because I don't think, this is my personal belief, but taking the person completely out of the loop in security is not a good idea. So you should have a person in the loop, but you can use like the new wave of technology to help him do a much better job, a quicker job, efficient job, etc.
Yeah. It's similar with the AI SOC space. Like there's a lot of popping up in tier one trying to automate. I think it's the same. I I don't know how some of these guys are pitching, but it shouldn't be to replace, to completely replace. It should just be to supplement and make that tier one much more efficient, so it frees up their time to
Yes,
do problem solving, right? Same
fully
sort of
agree.
scenario.
Fully agree. Interesting point on that is that sometimes as VC, you really feel the trend in the market by the companies you're speaking with. So I know it was like 18 months ago, all of a sudden we spoke to like 7 different companies who does SOC automation with AI, right? And then in the past, like say 6 months back, we spoke to 5 companies who are kind of in the dust space looking to automate the dust. So it was like a fashion. Like there's a place where, in this case, Gen AI can do a lot of work. And
Mhm.
then a lot of good teams are, and VCs pouring money to the space. We actually, when such thing happen, we usually take a step back, to be honest, because we are not a cyber focused fund. If you're a cyber focused fund, then you probably want a player in each market that you're looking at. For us, we'll just go to where it makes sense. And if there's so many companies and so many good funds and good money going to that space, we say, okay, I
Mm.
don't know how to pick the winner out of those 8 companies who does SOC automation, and not necessarily even have access to them. So I'll just pass.
Yeah.
That's really our take as a non-cyber focused fund.
Yeah, makes sense. What are some of the key or common challenges that you guys are seeing in early stage startups? And like, what do you advise to those about them? Is there like one or two that constantly crop up?
Uh, yes, I would say one that by far is that usually founders, especially in Israel, but I would say especially in cyber even, the founders are technical, like they're tech oriented, and they feel that if they'll build the best technology or even the best product, they will win. And they even think that the most expensive part is R&D. And then they face the market, and companies win because of go-to-market. And go-to-market is the single largest spend. So many times we kind of need to not convince, but kind of explain to the founders that, okay, now technology or product can bring you to zero or to even a bit above zero, but you'll win because of great go-to-market. So this is very, very common because we enter when there's like kind of really initial revenues and probably like a founder-led sales who sold to a few friends, which is fine, by the way. But now he needs to scale, and the scale doesn't work that way. So, and also specifically, if it's not an Israeli company, not a US company, then it's a different market. US, it's fine. We always say that everybody speaks English, but not everybody speaks American, which is very different.
Yeah.
So yeah, this is I think the single most important aspect or challenge we see when we invest in the stage that we
Mm,
invest in. The second is well, it really depends, but it's kind of more pertinent right now. It's just because of the market conditions. Again, cyber is suffering less from this what happening in the market, but in general, only top companies really managed to raise A, Bs, and Cs, and back 2020 obviously everybody did, and before that it was kind of 50-50, but now it's like really the top 20-25
yeah.
actually raising. And it's a pity because some companies maybe had a slow start, which is fine, it happens, but they can't get funding, unfortunately.
Mm,
So this is this challenge. So you really need to plan ahead, runway
mhm.
and fundraising to make sure that you're okay down the road.
Yeah. Interesting point, that second one, because I completely agree. I saw a stat in one of the cybersecurity newsletters that I follow that it was like 2020 and 2021 funded companies in the VC space. If you looked at layoffs and headcount losses or growth, pretty much everyone that was funded at 2020, 2021, where there's money just flying around, the decline, I can't remember the exact stats, but the decline of headcount was crazy versus folks that had been funded in 23 or 24. It was like that, and it was like almost opposites. And it just kind of falls into your point, right? Market conditions and where the top companies are now the ones seeing funding.
Yeah, this is by the way, for this point, it's not only the runway, which like the mindset of founders of 2023 and 24 obviously is much more cash efficient. Um, but also when you build a company in such time, when you decide to start a company, it means you're, let's call it, a real entrepreneur, because starting a company in 2020, like raising funds was so easy that anybody could, and you just saw the news and said, okay, I want to be a founder too. I'll start
Hmm.
a company, I'll raise something. And it did work, unfortunately.
Mm.
But today, you really need to be like the DNA of an entrepreneur to decide to start a company and start this hustle at this
Yeah.
point in time.
Yeah. In staying on cyber specifically, keen to hear your guys' thoughts here. Do you have any like specific verticals within cyber that you're looking at or excited about potentially now or into 2025?
Um, is an early like first of all, I'm not again a specialist in the cyber area. And to be honest, since we do early stage, it's much more about the people. Like obviously, I won't choose a shitty market. The best team in the world cannot actually succeed in a shitty market. But like if the quality of the founders is good, then it's early stage. They can still change route, like go 20% that way, 20 degrees, sorry, 20, 30 degrees the other way. So it's not like I can say you this threat intelligence is exciting me for 2025. In general, we we are very bad. We human beings are very bad at predictions.
Hmm.
If you look at the 2024 predictions or 2023, you'll see that the world is really different from what people predicted prior. So we try not to predict the future. On the other hand, we try to imagine how the world is going to look like, which is different than prediction, right? Because as a VC, I'm obviously investing not necessarily in something that people want right now, but something that people will want.
Yeah.
So I actually need to think, okay, how the world in this specific market will look like 5 years from now.
Yeah.
So this is an exercise that we do. The prediction a bit less.
Yeah.
It's just too hard.
Yeah. Yeah. How do you even do that? Like, because I hear different things about like science and art in VC, and I've heard some VCs that are trying to make it a science and like have all these formulas and stuff. But at early stage, it sounds like I don't know. That just seems almost impossible because it's about the founding team. How is there like a science behind it, or is this just kind of feeling, going off data, etc.? Like, how are you looking at
Yeah. So I would say that the new trend with which that we are proud to be part of, led by data-driven VC, DDVC, that you can take a look after. Andrew is leading this. He's a great guy um, from Early Bird. So it's the future is augmented. Like we said, right, in the SOC, it's not going to be 100%. It's never going to be 100%. But 50 it could be, definitely. 60, 70, I don't know, but 50 is always substantial. Same for VC, right? There's a lot of initiatives and also tools that you can now
Mm,
buy, but for us, even processes internally that we can do in order to take advantage of technology shifts for our favor. So if it's in deal sourcing, so looking for interesting founders or interesting people who left companies or exited or something like this. If it's following large trenches of data because of funding and competition, even to do a competitor analysis, all the way when you do due diligence is even to digest a lot of material. You can digest much more material right now, or even writing the investment memo, at least partially automatically, all the way to um, portfolio management. So the future is augmented, in our opinion, meaning it's not that especially in the early stage, it can't be
mm,
an index investing.
yeah,
It's not going, again, in my opinion, it's not going to be, but definitely the ones who will do it best will use a lot of technology, maybe in-house, maybe tool that they are buying to do it much better.
yeah, love it. And what advice would you offer entrepreneurs now then, Boaz? Like if they're looking to seek capital, let's say in this market, super competitive, maybe one or two bits of advice that you would give that founder or two founders that have that present PowerPoint presentation that are looking to go
Um,
further.
yeah, assuming that you already have the team in place, right? I can change the people. So I would say that what we like to see is a lot of um, just reference call with potential clients. Like if you have a thesis, that's great. But the best ones that we see are the ones who conducted not 10, 50, 60, 70, 100 calls with their ICP and the specific buyer within their ICP just to validate the thesis. And we see a lot of times that during this conversation, actually, there's a shift. It's not what you initially tend to do. So maybe it's in the realm because you were looking to do this space or your experience in this space, but you shift because you speak to a potential client and he says, yeah, well, it could be nice if you'll solve this problem, but if you'll solve that problem, that would be awesome.
Mm.
And there's like the famous hell yeah test, right? If the client says, yeah, I want it, it's not enough. You should be really enthusiastic about it. So I would say, please, just speak systematically. And again, today with technology, it's relatively easy using a lot of like simple and cheap tools to set 50 calls with a specific ICP and buyer. So please do that. Not even for me in terms of raising or for the VC, for your own sake, for your company, to actually increase the chances of your success.
Yeah, I think that's really key and a great advice. Given how competitive the market is, right, it needs to be done. You need to be solving a problem, as you say, the hell yeah moment. If you get 50 hell yeahs, then you're probably on to something pretty special.
Yeah, I agree.
Cool. Um,
There's a just a final remark. There's a famous post I can share with you later, so you can share with the
mm,
audience that different is better than better, right? So, like if you do
yeah,
something that everybody does just a bit better, it's just not good enough. It's a very hard sell.
yeah, I love it. Well, to wrap this all up, it's been a pleasure for coming on, dude. So I appreciate your time. Always great to hear your insight on the venture side and how things are playing out. Is there anything else that you wanted to cover before we wrap up?
Yeah, no, I think we covered most of the things. It was indeed a pleasure. Feel free to share my contact details with everybody. I like to speak to people. I enjoy it, and I learn the most from just interacting with people. So speaking about technology, something that won't change probably is the value of speaking to people and
Yeah,
meeting with people and expanding your network. So yeah, would love to
yeah,
speak with the audience directly
cool.
if possible.
I will put your contact details when we post this in the comment section below, so people can get in touch. But Buzz, yeah, it's been
Awesome.
a pleasure for coming on, dude.
Same here.
Speak soon.
Same here. Thank you for inviting.
Thanks, man.
Thank you for listening. If you've enjoyed today's show, please like and share with your friends and colleagues, as this is really important for the show's reach. If you'd like to be our next guest or are interested in Aspiron Search's staffing solutions, please get in touch directly with me or reach out to us via our website www.aspironsearch.com.